Hey guys, Andrew here from Bearable Traders. We had another really nice trading day on Tesla and also day trading options on Tesla, and I want to talk about that. But before getting in there, remember that Ardi and I are having a course for Money Show Conference on February 7th that we talk about how to day trade options. We're going to go through the basics and some of the strategies that I recently used with examples that you see. But for the recap today, I had a really nice 1 minute opening range breakup on Tesla. Plus after it pulled back to the VWAP and I realized that it's holding the VWAP, so it stays strong for the day, I sold some puts at 162. And that actually turned out to be a very profitable trade. Over $8,000 so far up on the options, and I'm still in the position at the time that I'm actually recording this. So let's watch this. Let's see what was my entry triggers, what was my exit position, how was my risk management. If you like this video, make sure to comment and subscribe to our channel. And let me know in the comments that what do you like to hear more in this channel, because we want to grow the channel. We want to actually tailor it specifically for what you want and make it a best trading education channel on YouTube. That happens only with your support. Let me know what you think, like the channel, and hopefully we can create more contents for you. Let's watch the recap. All right, guys, thanks for watching the recap. So I want to show you exactly what we traded today. It was an amazing trade that we shorted some puts on Tesla at 160 for end of this week. And obviously we traded Tesla as well for the opening range breakup. So now what I want to do is actually I want to explain to you exactly what we did trades and how was the profitable. So as I am right now shorting the puts, just before getting there, when you are short puts, that means that you are betting that the price is going to go up, so your puts are becoming worthless. So as you see let me show you that to you. As you the price of the Tesla is continuing higher, your puts are going to become worthless because nobody wants to they don't have any value. So essentially when you're shorting the puts and the market is going to go up, you're betting and you're making money and you're making a profit on that. So here's the trade that we did on Tesla for the puts. So as you see, we shorted at 3, we dropped at 2, and now I'm still holding it, and now it's trading. They're less than about $1. So that's almost $2 drop on these puts, as you see here. We'll see how it goes. You can let them expire by the end of this week. Then the value is going to go to 0, or you can just really cover them, whatever that's you want, maybe another half a position. But essentially when you're shorting, it's like exactly like shorting the stock. As the price drops, the value of your contracts are going to lower and lower. So when you're actually shorting options, the time is in your favor. As the time passes by, the decay is happening for the contract. But how that? Why did I short it here? And how was the trade? Let's take a look at it. So Tesla at the opened extremely strong. So sold off with heavy volume, 2 million shares, and it closed as a doji, came back up, popped above the VWAP, and then the time and sells. The time and sells was very bullish. For those of you who are part of our community and you see that we trade based on time and sells a lot, and I went very heavy size at 165 here, 164 something. We had two levels of the high pre-market, 165 and 165.71, and as it broke out significantly, we started partial 10%, 10%, and that was a really nice pop. That was a really good buying opportunity here to add on this pullback, or you can potentially add on the pullbacks to the VWAP, as we call something a 920 trade. 920 trade usually happens a little bit later during the day. So as you see here, we happened at about 11, but that could be also a potential opportunity. Now, how was the options trade? The option trade was based on this: when the stock is extremely strong and have a really strong move, when it comes down to the VWAP, there is a potential to add to the VWAP, and that story is only true for the very strong stocks. So as you see here, closed as a doji for a couple of times, and that was a really good time that you can either go long here You can go buy an entry, put a stop loss below the VWAP for the breakout. In that case, I didn't do that. I didn't add to my position. What I did is I came down a little bit. I realized that okay, 162 or 162.50 is a area that essentially below the low of the day, and I shorted some contracts of puts on that. Essentially it's a short put contract. So because if the price is going to go up, the value of your puts is going to come lower and lower, because nobody wants to put these contracts on anybody else at 162. Obviously, how many contracts you're using a leverage when you're trading options. My account is over $2 million, so I can take like 100 or 200 contracts. But the people who cannot, you can take even 10 contracts and make $1,000 or $2,000 on that. Obviously, how many contracts you're taking, it depends on your account size and your excess liquidity. But as you see, this Tesla stayed very strong for the day, and obviously I had Tesla shares covered at 171 and covered some at 173, and you see that it's continuing going higher. And Tesla is amazing because a lot of like 40% of the daily contracts that are being traded is Tesla. Extremely, the open interest and the volume on being traded on Tesla contracts are really nice. So if you can find the pattern really nice on that, you can have a lot of opportunity. And looking at the daily chart, when you're seeing here is that when you are looking at daily chart, you see that extreme volatility Tesla had in the last couple of weeks, and now it's trading heavily between 160 and 180 in this range. So by the end of this week, essentially 3 days, if it closes between 160 and 180, I'm going to make money on that. Why? Because I have two contracts. I sold the calls at the 210 and I sold the puts at 160. So in that range, if it stays in that range, I'm going to be very, very profitable on that. And I think that's a good bet because the average true range and volatility of the Tesla doesn't allow that this is going to squeeze back up to 210 and 220. So these are the contracts. Let me bring the positions again here. So these are the contracts that I had, 210 and 220. The value is probably going to go to zero, and I collect all of this premium that is staying here. So it's very unlikely that in 4 days you're going to get to 210 or 220, and dropping now with this beautiful drop that we are having, it's 173. So there's better chance that Tesla is probably going to stay above 160. However, this doesn't have to wait until the expiry date. You can actually cover them right now. So right now Tesla puts are going to be trading at, let's take a look at, at 130. So you're already up 50% up on that, and that's a significant amount of profit that you could have on that. So so this can be a day trade, and you can do that up for 210 and 220 because they're so far away. I'm gonna let them expire and just collect a premium. But for this one, I might actually cover them at the end of the day. So that was a very, very profitable trade, and I hope that you learned something from it. I also want to mention that, guys, we have now an options trading chat room that Jared and Megan are leading. So at Bearable Traders, for those of you who want to come and learn about the options and trading, Jared, Ardi, and Megan are coming and trading options. So for those of you who are interested, open to all membership levels. So hopefully see you guys in the community, and let's trade together. We do this all live, with each other, and it's really fun to trade together. If you like this, please subscribe to the channel, and if you have any questions, just leave a comment, guys. Thanks.